series, which is a weekly live stream interview and panel discussion series. We launched it last week. You may have joined us for our panel discussion. We had 3 different eye care professionals that are very experienced and had a lot of great feedback, and we had a fantastic audience. We had over 500 people attend and view our seminar last week. So we appreciate you all joining us this week, and we look forward to hearing some of Brian's insights today. So we're very honored to have Brian join us here. He is the CEO of ITR Economics. And Brian, you speak around the world, and you also speak to the eye care industry every year at the Vision Council Executive Summit. And you share your economic insights and outlooks from what you research and what you do at ITR Economics. Can you just tell us a little bit about ITR Economics and what you do there?
Sure. We are an economic forecasting company and economic intelligence firm. We're the oldest privately operating forecasting research company in economics in the country.
Wow.
And we tend to get it right most of the time because we are very objective about how we view the world, how we view economics. And every once in a while, you get a black swan like a coronavirus or COVID-19, as we now know what it is, that cuts across your path and just sort of blows everything up. But
yes,
becomes a question of what are we going to do now? What's the future look like after something like this happens?
Right. I bet that's been keeping you guys very, very busy.
Keeping us busy, keeping the local liquor store busy. It's
yes, they're definitely, I'm sure their sales are way up. Yes, and I trust you are well. You and your family are doing well up there. I know you're in New Hampshire.
We are doing well, thank you, and thankfully, it looks like it's going to stay that way. It seems
Great.
like the worst of the storm is happening right now, so if we can all stay healthy over the next couple of weeks, our odds are improving from here on out.
That's
and
great.
How about you?
Very good. So far, so good. Same thing. And we've just been laying low and, kind of cooking a lot and enjoying some family time and, kind of keeping in touch with our loved ones. We have family kind of all around the world. So we've just been keeping check because it's sure affecting everybody in every country at this stage. Yes, so thank you for asking. So, and Brian also pens a fantastic article for us in every issue, every year for us in our November issue of Eye Care Business, which provides kind of an economic outlook for eye care professionals for the coming year, which was, one of the reasons we have such a great relationship with Brian. And also we've interviewed him several times at the Vision Council Executive Summit. And we were just there in the end of January and talking about the economic outlook. And boy, has that changed since then.
It's incredible. Well, one of the points I made in January, and I've made at prior executive council meetings, is our industry tends to be relatively recession-proof compared to so many others. In 2001, our industry on an annual average basis went down 5.6%. In the early 90s, it was down a little over 3%. I mean, those are nicks compared to what other people went through. And during the Great Recession, we were basically up a couple of tenths of a percentage point in our industry. So it's one of those wonderful industries that normally can ride these things out. But between this being a close contact disease and governments responding by shuttering businesses, we really have a double black swan. We have the COVID-19 black swan. We have the governmental response, which is really unparalleled in American history. And that's going to create a lot more pain for our industry than we have seen before, obviously.
Yes. So, and that is pain that a lot of folks are feeling already, for sure. I just saw some numbers on sales of lenses and frames and contact lenses, just from February to March, or the month of March, the dip was about 50%, close to 50% of sales. So it's it's significant, and that's probably only, going to get worse into April, and hopefully things will come back. We're seeing a lot of some of the stores reopening, even some of the chains like VisionWorks announced yesterday they were going to start reopening. They have over 700 stores. They're going to start reopening some, but only for critical care, emergency care, to help keep folks out of the emergency room. So a lot of doctors are doing that now, and they're able to do that now. They've kind of been, just they were listed as non-essential, but now they're kind of listed as essential for that critical care. So
Sure.
they can be on the front lines.
Well, and so, I'm sure they've had time to develop some precautions that weren't immediately available to them either. So
very
smart.
good point. And a lot of readers have been telling us they now have the PPE, they now have the cleaning protocols, things like that in place where they took folks a little bit to ramp up, like all of us, and stocking up everything we need. And now we're ready to move forward. Yes. So I'll just have a couple of questions that we can run through, Brian. And I wanted to let our viewers know that we'll have a little bit of time at the end for Q&A. If you have a question for Brian, feel free to type it into the comments section in Facebook or in YouTube, and it will pop up into our chat here that Brian and I have going in our broadcast studio, and we'll be able to answer those at the end. So feel free to put them up there as you have them, or wait to the end and we'll have a Q&A at the very end. So just in an overall broad view, with businesses shuttered, unprecedented spike obviously in unemployment, folks having less funds to spend, consumers' movements now funneled into online, except for going to the liquor store, or, I just did curbside delivery for my groceries yesterday, things like that. What's the state of the U.S. economy right now? And as well as what's the state of the global economy right now? What are we looking at?
We're looking at a deep recession is in progress, both here in the United States, and it's worse in Europe, and it will remain worse in Europe than here in the US. What's very important, I think, for people to understand or gain a perspective is the timeline of this thing. We are in this deep recession. You and I, no one else is going to change that. But how long is that downturn going to last? And all of our analysis of the COVID-19 trends, seeing how it's played out in Asia, looking at those trends every single day, we get our dashboard of trends tied into COVID-19. We're seeing we're on target for this thing to be abating in May and June. And that means we're still on target for, in the third quarter of this year, people are going to start getting back on their feet. They're going to start getting back to some sort of normal behavior. Will they be made whole for all the people that have been thrown out of work or furloughed? No, but let's not underestimate the heroic efforts the government's has been put forward, not only with the $2 trillion tranche, but there's a whole nother $1 trillion tranche coming behind that. And then in my world, the Federal Reserve is the unsung hero, keeping the credit markets open. The speed at which the fiscal policy stimulus and the monetary stimulus have come to be is so much better than we saw in 2008, 2009. And that's what allows us to think at this timeline that we have rounded the bend and we're beginning to rise as early as 3Q20 is real, because we've looked at how long does it take before you pass these pieces of legislation, get the checks out the door, the Federal Reserve makes these decisions, and people start responding accordingly. And it's not like we're immediately back to where we otherwise would have been. That's impossible. But it means we're back to conducting business and life becomes normal.
Right. Well, and if obviously we'll all be watching China to see how that pans out. But obviously they opened yesterday, Wuhan back up again, and people can come in and out, and businesses are kind of starting to shift and move again. Do you think that will be a good indicator of where, with their economic bounce, will that be an indicator for what we could expect? Or obviously those economies are different.
Yes, they are different, and ours may take a little bit longer because it's less command and control, but it's also a more resilient economy that we have here. But in terms of China, they're already operating at 90% capacity utilization in manufacturing. Wow. Their consumers, well, they're not feeling upbeat yet. They are buying things. The biggest inhibitor to China's full rebound is the lack of demand from Europe. And that's because Europe was much more draconian in shutting down the entire economy. But China's ready to produce. China's putting stuff on the boat now, heading toward the United States. So we don't have to worry about the big supply chain disruption. That was the other part of all this in terms of the U.S. economy. And China's got provinces that are reporting 0 new cases. And we know that the new case totals in China are coming down. South Korea is flat in terms of its death trend. Taiwan, the situation is improving. And those are great canaries in the mine as far as we're concerned, because that's where it started.
Sure. When I would imagine,
Italy, by the way, if I may, Italy's daily death trend, which is, I never thought I'd be measuring death trends, but that's trending downward also. And they're just about 4 weeks ahead of us. So all of this is great in terms of seeing light at the end of the tunnel.
Yes, certainly. And Italy, is a very, it's certainly hit extremely hard compared to most other places, for sure. So it'll be interesting to see how that bounces back. So you mentioned about 2020 in the third quarter. What do you think 2021 is going to look like in terms of the economy?
Our continued recovery and gains. And we, in our forecast anyways, by probably not 21, but on into 22, when the rising trend continues, we will have completely recovered. In other words, gotten back to where the economy started from before this COVID-19 black swan came across and broadsided us.
Right. So I'm sorry. So you're saying at what point do you think we would maybe be
late
back
21,
to more normal?
Early 22, we will have gotten back to where we started from.
Okay. That's great to hear. Yes. And I think I was reading something about the Spanish flu, and they said, oh, well, that took them, 5 years, but obviously it was a very different time, 100 years ago, a different economy. And, it was different kind of system.
And also, if you read up on the Spanish flu, it took out such a large percent of the global population.
Right.
That's not going to happen this time.
Right. And we have modern medicine today, which makes things very different, for sure. So that's great. Okay. So my next question was, is it a good answer to when the U.S. economy will be functioning again? And that sounds like third quarter, we're kind of, starting to ramp up, and then 2021 is a recovery period. And then hopefully by the end or 2022, we're back to maybe where we started from. So, and in terms of, looking specifically at our industry, the independent eye care professional, what are the most like that kind of independent optometrist, independent optician can take for survival in this critical moment? What are you recommending for small businesses?
Several things. One, if you don't already have the ability, quickly learn how to do a very good cash flow analysis and cash flow projection on your business. Find out how much cash you have and how long you can make it last. You have to know those things. Step 2, apply for the PPP, the CARES Act for your payroll, so you can cover your employees. For most of us, that's going to be a forgiven dollar amount. As long as those employees aren't earning over $100,000, that amount will be forgiven. So this is the government offering to give you a huge bailout as long as you keep your people employed. And 2 months out from now is April, May. That's going to be just about covering it. And the other thing I would do is start figuring out how I'm going to reassure my customers that it's safe to come back in. They're going to have the need. Some of them will have learned to do this on an e-platform, but I'm not convinced that that's going to be a big, significant shift out of this. So convince
Right.
them with your marketing, with your promotion, that there are these precautions in place. They are going to be safe, and each of those independent folks, they're the trusted advisor who cares about them and their total health.
Sure. Yes. And we're definitely seeing, a need for that. We ran a survey of our readers. We're actually running the second wave right now. It's the COVID-19 and Eyecare Professionals strategies survey. And we found that much larger than we anticipated portion of our readers said they had not sent any messaging to their patient base yet. So it seems that, yes, this is a great time, to be reaching out, to be building that relationship, to be reassuring them, to, kind of build on what's coming for the future for reopening and how, what steps you're taking. So that was a very eye-opening statistic. The other statistics that one of the most impactful statistics is that 85% of Eyecare Professionals, respondents to our survey, told us that they expect a significant financial impact to their business from this crisis. So, obviously, when your sales dip by 50% or more, and you're laying off some of your workers, which a large percentage told us they have done, what would you say that, is that, and that's just that kind of in the moment projection. It actually, our first wave of the survey, the number was higher even, it was 90%. Now it's down to 85% feel that's going to have a significant impact. We'll do another wave in 2 weeks, perhaps maybe that is a little, the crisis level has gone down, and I think in everyone's feelings over these past several weeks. I mean, at least we feel like maybe we can get a handle on this and there is a future. So what do you project for independent eye care professionals? What can they expect? Is that, should you expect you're going to have a significant impact to your business? Or is the impact going to be, March, April, May, June, July, and then you're kind of getting back on your feet and you're starting to build up your business again, as you've mentioned, for the economy?
I very much think it's that last scenario, that it's April, May, June into July, but particularly when we get back into going into school mode, you're back in business and you're repairing your income statement at that time. That's still going to constitute a significant hit, obviously. But if you are watching your expenses very carefully right now, then what it's going to be is a hit to your profitability rather than digging yourself a very deep hole. Sure.
Right. And then to be able to take advantage of things like the, is it PPP or PP? Yeah, PPP, the payroll payment plan or payroll. Yeah. Anyway, if they're taking advantage of loans and things like that, then that can kind of help through that period as well.
Right. And if they're thinking about their customers or even their employees, keep in mind that the federal government has been very generous with the expanded unemployment numbers, in terms of $600 additional a week going to people above and beyond their normal unemployment compensation.
Which is great.
That's going to help a lot of people in loan forgiveness. You're seeing banks deferment, adding it on to the end of the loan. You saw automobile insurance companies giving rebates because stay at home means you're not driving as much. So almost all the major insurers are sending rebate checks out to people saying, we realize you're not getting in accidents because you're not going anyplace. So there's a lot of little things that are going to come together, though, that make a big difference in that regard.
And that's the consumer, and in consumer confidence to go out there and to buy something that they need, like eyewear or, and that is part of that recession proof. I mean, if your child's going back to school, they need new eyeglasses, that's going to get purchased over a new Atari or, a new PlayStation kind of thing. So in this environment, especially. So, what do you think, so consumer confidence, you think is going to also continue to be rise and to grow and to be able to feel okay spending?
I think so. A lot of the consumer confidence, I think, will get its lead, if you will, from the stock market. And our analysis
Right.
of the stock market is that, well, the numbers are 72.3% probability that April will have seen the low in the stock market, and that it's not going to be a nice, smooth rocket ride up, but
Right.
the decline is behind us. And if you can get days and then weeks knitted together where we're not seeing those catastrophic declines, people start feeling more confident, and they just start feeling like things are coming back to normal.
Right. So, and that kind of leads into my last question, and then we'll head into the Q&A session. And I had mentioned the numbers that we just saw on the dip in product purchases. Obviously that's happening everywhere except for liquor and food and toilet paper. But for the larger eyewear industry, looking at the companies, the lens makers, the frame makers, the folks that are also there at the Vision Council Executive Summit, those companies that are supplying the industry contact lenses, with products, will it be the same for them, in terms of the bounce back? I mean, as the businesses bounce back, we're looking at the same, or is there a lag? Because obviously folks have product in now that's sitting on the shelves. There are a lot of folks are asking for deferred payment plans and, kind of different situations to help get through this time. But once we start rolling again, will those companies, the lens and the frame makers, see a lag behind the recovery, or will they kind of move at the same pace?
It'd be normal to see a lag behind the recovery in that inventories are going to have to be worked down. I'm sure inventory is piled up pretty quickly because it's hit so rapidly.
No doubt.
So they're going to have to be worked down. And the best way to get around that, I suppose, is having the next fashion must-have that sort of circumvents all of that, right?
Right. We're seeing a lot of the companies now making the face shields as in addition to, their own regular product offerings. So that may become the next fashion statement.
Oh man, what an awful thought.
Okay, so I'll head into our questions. So for our viewers, if you have, we have a couple of questions here, but for our viewers that haven't put up questions yet, feel free to pop those up there and we'll dip into those. We only have a few minutes left here, but we'll try to address everything that we can. So we have a comment and it leads me to a question here from a viewer, Anik Boshaman. Sorry, Anik, if I did not get that correct. She, kind of sensed that it was very optimistic to think that overall that we may be better in the US than in Europe. Why is that the case, Brian? Why would we have a better experience economically here than in Europe?
Oh, well, and I understand that perspective, thinking that it may be optimistic. Two reasons. One, while the European Central Bank has been stimulative in their monetary policy and responding to the crisis over there, what they've been doing pales in comparison to the Federal Reserve, which is just thrown everything, including newly invented kitchen sinks, into the mix here to get things going much more aggressive than what we're seeing the ECB doing. And
right.
There's been no concerted, coordinated European fiscal policy effort. I mean, Italy went through a big debate about spending 30 billion euros to try and get their economy going. They're a $1.7 trillion economy, and they couldn't agree to spend 30 billion euros on their economy. Here in the United States, we've already amped up 10%, and they're talking about entering up another 5%. In Japan, the government's going to put forward 20% GDP to try and get that economy going again. So I think when you see the level of concerted government effort and the age of the population, both factor into thinking that the U.S. is probably going to have a better experience on the other side of this than Europe will.
Right. That's great. Thank you very much for explaining that. That makes perfect sense. So, and I also just have a nice comment here from Hannah Cho, who's a friend of ours too here at Eyecare Business. Very helpful to hear a perspective from a different industry. Thank you for doing this. Big thumbs up.
Thanks,
And
Hannah.
then, and then Scott Lewis has a question that can we trust data coming from China? So I don't know if that's a question you can answer, or how they present their data. But it's
two reasons why we can trust it. One, it goes back to Ronald Reagan, right? Trust but verify. We have partners on the ground in China, and they're telling us that what the government's telling you is real. They're out there, they're talking to people, they're surveying people, the businesses, they know what's going on, they're observing it. It is real. And the other way we think that it is real, the data is valid, is that it dovetails with data coming out of Taiwan and South Korea, two much more transparent economies, both highly statistically oriented. So there's no anomalous reporting going on as far as we can tell.
That you can tell. Yeah, thank you for answering that. So the next question is from Jignesh Mamtura, and hopefully I got that right, Jignesh. He says the millennials, or rather put the 20 to 35, who are the most brand conscious, who are the most people spending the most, would now be concerned about saving more, and hence the branded or the higher end spenders would be less than ever. Do you think the luxury market will be really affected? Is that going to be a really tough go at this point? Will everybody kind of be wanting to be more economical with their purchases and more frugal going forward?
Well, I certainly understand that perspective, but let me give you another aspect of human nature. We're still alive. Let's enjoy this. I've always wanted that. What am I waiting for?
We made it, right? Got to live for today.
Right. So, I know a little hedonism can go a long ways in our economy.
In praise of decadence.
Exactly. So, we're likely to see a bifurcation of behavior along those lines.
For sure. And there were a lot of, the luxury market was humming along before this happened. This wasn't an economic, driven crisis. It was a virus driven crisis. So so people have their habits kind of set in place. So I guess we'll see where it ends on the other side.
The luxury market rebounded very well from the depth of the Great Recession. And even though that was economically driven, the severity of it can leave the same sort of scars. And it rebounded from that. So it's going to rebound from this.
For sure. So, and our very own publisher and VP, Mark Durick, who, Brian, well, he has a question. As practices limit the number of vendors they do business with moving ahead, any advice on how to stay out in front? We hear that quality and customer service needs to be front and center. So do you think that kind of, and you had mentioned the communication and the marketing and things like that, are critical for folks to kind of get it out there? I think those folks that aren't communicating might have a tougher time.
Absolutely. And if you're winnowing the number of vendors you're dealing with, don't make it all about price when you're taking those vendors into the marketplace. Make it about why you chose those vendors. It's got to be some aspect besides price regarding why you chose them. Make it about not necessarily a luxury good, but this is really going to be good for you, my patient, because, and it's not because it's the cheapest. Anybody can do that. Just don't go there.
For sure. Great. And then one last quick question from Scott Lewis again. He asked if you think there will be a China pushback that U.S. consumers will want to purchase U.S.-made eyeglass frames. Obviously, if that goes for any kind of U.S.-made product versus non.
Yes, I actually think they will be.
You do?
We're going to see a medical retrenchment here into the United States, and I expect our eyes to come along with that. And more and more people are reassessing their supply chain risk of doing business in not just China, but all of Asia, as opposed to keeping it on our shores. That's going to be a major trend, I think, over the next 10 years.
Right. For sure. That's great to hear. I mean, interesting, really interesting information. I got one last super quick question from Hugh McManus, who has seen you speak at the summit. And he says you speak wonderfully at the summit for established professionals. He's curious, as a millennial, more at the summit, there's been a lot of discussion about millennials. If we are lucky enough as millennials to have funds to invest, if we've seen the bottom, should we be investing? And if so, where?
Well, first of all, hi, Hugh. I remember you.
That's great.
And yes, you should be investing, Hugh. This is a good time. Let's assume that you have this pile of cash. What my advice to you is take 25% of that pile and put it back into the stock market, or maybe if it's more real estate you're interested in, find the right piece of real estate where there's a growing demographic and make that move today. If it going back to stocks though, 25% of that liquidity goes in now. I'd wait another week or two, see what the market does, and move some more of that liquidity in. I'd hold 50% back. And if you're following ITR, we're going to give you the all clear. And what we're doing right now, and I'm heading up that research, is we're trying to find the best industries, not companies, but the best industries to be literally investing in through stocks, the ones that we think will have the best rebound on the other side of this. So stay tuned in terms of the other 50%.
And it's itreconomics.com is your website? Okay,
yes.
Great. And you guys have fantastic webinar series on economic outlook, and I see you keep updating them and adding more and more. So those are really excellent to check out for folks that are interested to keep up to date with that. Yeah, so thank you. Thank you so much for joining us, and thank you for the extra couple of minutes with the questions here. And we really appreciate your feedback and insights. It's invaluable, and best of luck to you and all your research, and stay healthy up there.
You too, Erinn, and thanks for the opportunity. We are working hard, at least we're trying to partner with people like you who are just doing our best to make sure people stay calm and carry on.
And that is great advice. Fantastic. Well, I'm gonna go do that.
Okay. Thank you, Erinn.
All right. Thank you. Have a good day.
You too.
Bye-bye. Thanks for joining us, folks, and thanks for all your questions. Thank you. Bye.